Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see you all. Happy non-farm payroll Friday, dealing with the aftermath of, there we go, the 8:30 a.m. hot zone that we had today, looking at the volatility of responding to that jobs number, the fifth pillar, if you will, of the current macro environment, and frankly, one that I would not say is necessarily going to sort of complete the day. What I mean is, if we see a lot of volatility at with a pre-market hot zone, there's sort of an echo effect, which is to say, remember, equity players can't respond to that 8:30 a.m. hot zone. And that means that there's a whole group of traders at 9:30 that are going to have to respond to it. So it's kind of an echo. So the way that we see the response at 8:30, don't be surprised if we see sort of a secondary similar response. And if that is very volatile, pushing the upper end of the price movement range, hourly price movement range, sometimes the market has a way of finding the range so early that we end up with sort of a lethargic opening range. And of course, today is a caution day, as was Wednesday. Today is as well. Anytime we have these high impact releases, we're going to see oftentimes sort of a caution day. What does that mean? Play a smaller size, be more conservative. It is Friday. And as I like to remind my traders, Friday kind of hates traders sometimes. So let's be cautious. It's the end of the week and the end of anything, end of the day, end of the week, end of the month, end of the quarter, end of the year, has a completely different psychology than the beginning of something. Appetizers are different than dessert. So anyway, happy Friday. Good to see everybody. All right, let's kick it off. Let's kick this off. Non-farm payroll in the rear view, but we know that echo effect could happen at 9:30. And let's jump into the questions. Hey there, Peter. Good morning. Good morning yourself. Do I still make a multi-grid for some sectors that stocks are not heavily weighted? Okay. So do we make multi-grids, these multi-chart layouts for non-high concentrated weighted ETFs? What does that mean for those of you that are kind of new to the lingo? Great question, Peter. The answer is it doesn't really make sense to do it. You'd have to revisit it every single day. And that also means that the influential stocks in that ETF are going to change rapidly and therefore probably aren't fixed enough in the traction and the weighting to have a prolonged effect. So what is high concentration weighting? Well, when you take a look at the S&P, let's come on back to the S&P, the SPOOs as they're known. The first 5 to 6 stocks in the S&P 500, SPY, SPX, ES futures, micros, you name it, 20%, right around 20% of the weighting of a 500 stock index is in the first six names. High concentration weighting, therefore, is a very small number of stocks have a disproportionate weighting within that index. The Dow is this way, S&P is this way, the NASDAQ is this way. Most of the sectors that are weighted within the indices are also this way. Now, the list you have there, great list of those ETFs that are exceptions to the high concentration. So the simple answer is no, but that's why it just almost doesn't make sense for us. So terrific question, Peter. Hey there, Michael. Good morning. Think we will get any trade alerts for the ETF class? So those of you that have been in the ETF class, number one, thank you. We are completing the last day, and I know why you're asking, my friend. We're completing the last day of the pro level. We're going into elite. And yes, I am actually looking, and so I'm looking at 6 symbols that we're going to set up. And if we have some proximity, we'll probably get up to 6. I'm thinking at least, looking at this list here, at least 2, maybe 3. So the answer is yes, and that's how many. So these will be, of course, in the style that I like to alert, which is giving you a heads up as to what the trigger prices are, so that you can see the price when I see the price, and therefore that's going to be what is the catalyst for our putting in the order and getting our fill. So yeah, I think we're going to end up, I mean, now that we're past FOMC Wednesday, now that we've got non-farm payroll, and we still can see where the structure is in this market, from the class structure always precedes strategy. Yeah, I have 1, 2, 3, 4. I have 6 symbols on the watch list, and 3 of them that look pretty imminent. And so I'm looking to send those 3 out at some point today. So you will get those if you're in the pro. Yeah, I'll be sending some out today. All right, next up is, let's see here, questions. Feel free to type them in. TH, it's your first Friday jobs. Oh, the first for November, and right. By the way, whether it's the first, it's the first jobs report for some of you. Clearly, it's the way November kicks off. It's the first. Usually, we don't always have an FOMC hot zone at the beginning of the year, but usually the sort of first major economic release we get for a month is not NFP, the first Friday of the month. And for those of you where this is your first NFP, you saw the wick. I mean, look at the wick here, most definitely on the NQ. Look at that craziness. I don't trade NFP. I want to watch it, track it, and see if we end up with any emerging trend. In fact, if anything, you can say subtly, and you might notice this, everyone, if you look at a shorter term time frame view of the NFP, we were sort of heading lower. Then bammo, we get the hot zone, and then subsequent to that, you can see that we're starting to move a little bit higher post the hot zone, which is, look, I'm not that intent on hoping it goes up or down. Frankly, either way is going to give us an opportunity. It moves higher, it carries some of our long positions higher. It moves lower, gives us opportunity to maybe get in. So there's always something we can do with either direction. All right, next up. Hey there, Tim. How are you? Love the free video. Am I still shooting for USO Jan long calls? Will we be adding today, or will be adding today? So yeah, I mean, I love following up on conversations, because let's take a look at that crude oil trade. So this is where, for me, the decision-making process is very much rooted in, well, let's channel back to our SAT prep classes, right? Where we had to memorize so much Latin, if you remember. The root of decide is deceive, I think. It's been a minute. I did not have a super high SAT score, but I do remember that one. And the root for decide means to cut off. So the first thing I need to decide is which end of the potential trade am I going to cut off, and be able to do so consistently. Well, if I have a C, just a C of green grab candles, and the structure of the market was 8 over 13, 13 over 21, 21 over 34, as for the majority of the time, I got to buy a dip. I can choose to do nothing. And I think if there's anything that I did and maybe underestimated, was just how much OPEC was going to create bearish volatility. I like the way that we faded the day before OPEC with that big sell-off, because OPEC was expected to have a 400,000 barrel per day increase in production. That's, of course, bearish to the underlying market. Having said that, that secondary reaction, which was the OPEC meeting and the presser subsequent to the meeting, it was a short meeting where they announced exactly what we thought was going to happen, sent the market down again Today is a big day. So Tim, I remember commenting this in one of the previous videos. It might have been a question from a previous Charts and Coffee. It might have been from one of the free videos. And somebody asked about, how we deal with the trend. And I channeled my inner trendalorian. And I said, we recognize the structure the market's up. We buy the dip. We place a stop. This is the way, right? That's it. So all I can do is what the structure and strategy dictate I should. I place a stop because, of course, we always want to consider that we may be wrong. But if you've been looking to capitalize on the volatility and you wanted to play a short accompanying OPEC, which, I don't think that's pretty slick. That's it worked, right? Remember, the OPEC meeting's over. We know what it is now. Today is the first day where crude oil takes a breath and says, all right, what's next? And so for me, what's next is the continuation is more probable. So I think we're pretty much built in here. I don't want to keep, quote unquote, adding. We had those levels from the alerts. Build the trade, place the stop. That's it. And then we just see where the dust settles, quite literally in this case. Mark's drinking old school Folgers. Hey, however it is, you need to caffeinate and dominate. I'm with you. Love it. Sometimes I do some mushroom coffee. Sometimes I grind up. Yeah, that's the fun part. All right. Coffee time. Yeah, I agree. I love you, coffee time. Exactly. Caffeinate and dominate. All right, let's get to the next question. Hey there. Good morning, Tom. Do I trade heavily weighted ETFs differently than equally weighted ETFs? Do I trade them differently? That's a good question. I want to phrase this as clearly as I can. The simple answer is yes. Below that yes is I'll focus on the ETF. For example, if I'm trading, let me give you an example. If I'm trading OIH, which is actually not one of the more affordable ETFs, I might focus a little bit more on Halliburton and Schlumberger. I have that latitude because those two are so high concentration weighted stocks. I believe those two alone are something like 40% of the weighting of the OIH. The OIH is Schlumberger and Halliburton. XOP, which is absolutely on the radar, doesn't have high concentration weighting. I won't necessarily focus on some of the individual names within them. I might if they look good, but I may not necessarily focus on some of the individual weighted names because they're always sliding about the scale. I'll likely just go headlong into XOP, and that's the main difference, Tom. Whether or not I can think about the individual boats, or whether or not it is best to focus on the tide. Okay, great question. Nike. Hey there, Mark. Nike. I was watching The Last Dance, which of course is practically an Air Jordan infomercial, and then I was reading that Scottie Pippen, Pip has a autobiography coming out where he wasn't so pleased with Last Dance, and I think about that when I pull up Nike. Nike's heading higher. It's parabolic. It's double green, but you know what I'm going to say, right? You know what I'm going to say. I need a pullback. So I can look at the pullback a couple ways. VWAP, wave, pull the Fibonacci retracement once we get the minor high. But the pullback's what I need. Yeah, it's definitely what I need. And this has gone parabolic. There's no question about it. How do we know it's gone parabolic, and what the heck is parabolic? Think about parabolic as just accelerating, over accelerating. I think that over accelerating is really the hallmark of a parabolic market. It's been shot out of a cannon. The way we can gauge that it's parabolic is to understand historical volatility. What does the market normally do? What is it doing now? And when we really stray from that normal market movement, then we know that something different is happening. In this case, parabolic is the outcome of that acceleration. Good stuff. So I need to pull back. Next up, what are my thoughts on USO? Anthony, there's a great line from one of my favorite books, and y'all know I'm a book junkie. I'm probably borderline in need of an intervention. I do love books. If there's anything I might like more than trading, it's reading, no doubt. That being said, What are my thoughts on oil? One of my favorite books for trading psychology is called What I Learned Losing $1 Million. We all can make money in different ways. I'm just sharing my opinion, right? On how I like to position myself to profit from the market. But we all, not so surprisingly, lose with a very similar pattern. And that's what that book is about. I highly recommend it. What I Learned Losing $1 Million. It's been on my bookshelf for probably over 20 years now. In that book is a line that reads, am I bullish because I'm long, or am I long because I'm bullish? Am I bullish because I'm long? That's the kind of mindset that's going to lead you down the worst of paths. It's which destination is called market implosion, account implosion, right? You're going to just explode your account. If you're long because you're bullish, then that's where we want to be. So if I take a look at USO, which is the same conversation as crude oil, I'm long because I'm bullish. When the validity, as I like to call it, the point of validity is broken, and that's not going to be gauged by USO. It's going to be gauged by crude oil futures /CL on TOS, CL, the number one exclamation point on the platform I'm on right now here, TradingView. If you happen to be on TradeStation, it's the @ CL. I'm looking at the continuous contract of the futures. As long as that can stay above validity, I'm going to remain bullish. And because I'm bullish, I will remain long. So are you bullish because you're long, or are you long because you're bullish? We always want to be the latter. So that's it for crude, right? And then Michael, exactly. Additionally, respect the trend that was. You got it. You got it. Do I ever trade Joe? As in coffee, or I also look at Joe and think of the orange juice. But do I trade coffee, or for that matter, juice? They're both softs in commodities. Not as much as I used to, Bill. I used to trade for the first almost 10 years of my career. I was a daily time frame commodity futures trader. Emphasis on commodities, good old fashioned grocery store commodities. And keeping an eye on commodities is very different than looking at sort of the grouping of treasuries, currencies, indices, metals. And the reason for that is they tend to move together. Currencies, treasuries, indices, metals tend to move together. And then the equities within them, that's in that group. But over here, I might have grains, meats, softs. That's where you're looking at weather, USDA crop reports. And it's a little bit more disconnected from that other group. So I do like to trade coffee. I did once upon a time. The trends are good there, but they can move very dramatically based on things that aren't always things that we'll know if we're focused on equities or equity type products. So because of that disconnect, I find myself, unless, like, for example, we had that reflation trade earlier this year. That's where it's different. That the impetus for why those markets were moving higher was actually a lot more firmly related to the same macro that was affecting stonks, right? And that was affecting the US dollar. When I can get that kind of sort of cohesion, awesome. If not, they're so disconnected, and it actually starts to dilute my attention, and I just don't trade it as much. But it's got a good structure. I love softs. I did a lot of my early day trading in markets like coffee and cocoa. So I just don't do it as much. All right, how much heat might we see in bonds? Okay, so we have two markets bond-wise, not the James variety. We're no longer in the ZB. We're actually looking more at ZN. And just as I say, all I can do is follow the trend and then place a stop. This is the way, right? So I like where we are in ZN. I'm okay with it. I'm okay with it. We're no longer in ZB. I'm okay with the 10-year. And so how much more might we take? I'd like to think not much more than the high from, as you can see here, November 4. I'd really like to see us stay below the high of November 4 or the high of November 14. So, October 14. I'd like to see us stay below there. That would be really what I'm focused on, Ian. Yeah. All right. Steel, I can't play right now. It was looking interesting in front of earnings in terms of that 642 window where I like to follow the trend before earnings. Get out before earnings and then reassess after. So there's that pre-trade, then there's that post-trade. And in terms of that post-trade, what we have now is a change in direction. So I'll have to re-examine the structure to figure out what the strategy should be. And right now, I'm probably going to pass. There might be some other names that we like in XME or in SLX, but I'll pass on X right now. TMUS, is it ready for long puts? Oh gosh, I'll tell you what, I can't. And as long as this is choppy and weak, I'm going to look at telecommunications and communications as well as two corners of the market that are probably still okay for puts. But no, I can't get long puts here. Now that's a yellow market trend, if that persists, if we can stay JT multi yellow over yellow, then what we can do is think about a 1, 2, 3. And if you don't know what a 1, 2, 3 is, if you don't know what a 1, 2, 3 pattern is, that's a classic. That is a classic Dow pattern. And you can learn about it over at countdowntrader.com. All right. So next up is UNG. You know, this trade has been so good. Natty has been so good to us. It's getting a little long in the tooth. The structure is starting to fall apart. I'm very grateful for the trades we've had since August. August was great to us. September was great to us. Even mid to late October was great to us. But as the yellow over yellow was introduced and then the yellow lower JT multi persisted, it's been increasingly choppy. So I'm expecting one more push. And then we're, as I mentioned to, I think our Sector Secrets Mastery and the futures folks will be done with UNG. We'll be done with Natty. This is our fourth or fifth entry in Natty. It's the very last one. It's probably in the least desirable structure. You know, getting in now is sort of, you know, the buffet opened at 11 and we're sort of showing up at 2:30. It's kind of picked over. I'm going to persist, but this will be the last long. And, you know, we bought back here on the first near the lows. And, you know, at least that gives us some latitude to be sitting on some unrealized profit. But it's probably my least favorite of the structures that we've seen since we've been playing it in August. I hope that helps. All right. I think we got through all the questions. I'm so stoked. Some of you picked up. Tom, you picked up. You're going to love it. Let me know what you think. Hit me up on Charts and Coffee next time I see you all. Sorry I ran over. Gosh, I forgot to look at the clock. Yeah, let me know what you think next. I think you're going to love it. I think you're going to love it. You will not be disappointed. It's a great read. And then while you're getting propelled through this really great story, you're going to have these aha moments as you're sort of given the transparency of someone who's losing. It was more than $1 million. But you'll get this great transparency of all the psychological pitfalls that happened as this trade went on. It's a great story. All right. Be good to each other. Have a terrific weekend. It's a caution day. I will see you all for our Q&A in the futures room at 3 p.m. for the close. Enjoy your weekend. I'll see you on Monday.